Hey, what's up YouTube? I'm Zeke and welcome to the Dream Green Show. In this episode, I'm gonna give you the 3 top oversold dividend stocks. And with these 3 dividend stocks, I'm gonna show you how you could grow your portfolio to where you could retire making over $100,000 in dividends every single year from these 3 oversold dividend stocks. What I mean by oversold means that the price points of these stocks had dropped significantly over the last week or so, over the last couple of days or so, and we could begin in on a great deal that is called us buying a stock on sale. So I'm gonna show you guys exactly how I find these stocks. I'm gonna do a market analysis over them, and I'm also gonna tell you what price point I'm comfortable buying these stocks at. But before we dive into it, this video is brought to you by Webull. Sign up now by clicking the link down in the description, deposit $100, and now you can receive 4 free stocks valued up to $1,600 each. You can keep your 4 free stocks in the platform and decide to use it, or you can sell those 4 free stocks and withdraw all of your money. It's literally free money. Also, I left a link to Coinbase down in the description. That is by far the easiest way to buy and sell cryptocurrency. But enough talking, let's go ahead and dive straight into this video. Here we are over on my Webull account. If you don't have a Webull account, I highly suggest you get one. This is way better than Robinhood. Right now, my account is at $14,258.60. It keeps changing because I got a little cryptocurrency in here. Me personally, I always will invest around 1% into cryptocurrency every single week. I love Bitcoin. But let me show you guys exactly how I find these dividend stocks that are oversold. Right here on your Webull account, you want to click more. And then you're gonna scroll down all the way to the bottom to where it says screener. You wanna click screener. All right, in the last video, I showed you how to set up the oversold stocks for the large cap company, for the $1 trillion, $500 million companies. Let's set up the one for the oversold dividend stocks. So we're gonna click create new screener, market cap. All right, we wanna get rid of all the penny stocks. So we're gonna change it from 1 billion to around 0.5 billion, which is $500 million. We don't want any of that. You see that bar on the left where it shows all them other companies? Those are penny companies. Any company under $500 million is a penny company. And then we want to go all the way up to the top. There, we're done. Now we want to click on dividend yield. I'm comfortable investing to dividend companies that is over 1.5 dividend yield. And I don't want to invest into any company that has over 20% dividend yield. That is too high for me. All right, so I'm not comfortable investing into anything over 14% because that company don't have enough. They're paying out too high dividends to reinvest into their own company to actually help that company grow. So 14% would be the highest I would go. Hit OK. Then we're gonna come down and we're gonna click the RSI 16 oversold. Click that, and then we're gonna save this as oversold dividends. Hit OK, and then we're gonna click it, and I like to search it by market cap. That means these are not any penny stock companies. So the ones I'm in love with Walmart. So I did not know Walmart was oversold right now. We could be getting in at a great deal. So we're gonna take a look at 3. We're gonna take a look at Walmart, WMT, Bank of America, BAC, and then we're gonna also take a look at Verizon. I skipped over United Health just because I don't really like United Health, just because they're $333. I don't have that kind of money. So we're gonna look at Walmart, Bank of America, and Verizon. Those are the 3 oversold dividend stocks that we're gonna take a look at. I'm gonna pull up their dividends and we're gonna do a market analysis over them. And then I'm gonna show you how you can make $100,000 every single year from these 3 stocks in dividends. Let's go ahead and pull up the charts. All right, here we are, guys, on Walmart. This is Seeking Alpha. Right now, Walmart has a dividend yield of 1.54%. They pay out $2.16 per share over the course of a year. So let's take a look at Walmart. Bam, there it goes. Walmart did dip. It is oversold right now. When we mean oversold, we're looking at the RSI. Bam, it's oversold. It's below the 30 right now, so it's very much oversold. It's down way below the 180-day simple moving average, which is the green line right here. And it's on a downtrend and it's pulling back quite a bit. So for example, when it's overbought, which is at the top of the RSI, this means it's overbought. That means it's overvalued. people think it's overvalued, so it usually pulls back. And right here is oversold. That means a lot of people are selling off of Walmart. That means we could come in and scoop it up at a great price right here when it's at the bottom of the RSI. But you guys already know what I love to do. I like to look at the Fibonacci. There's two Fibonacci sequence that we could look at. We could look at this consolidation point right here, or we could go all the way back to the bottom. So let's pull out the Fibonacci. We're gonna go from the very bottom and put it all the way up to the top. All right, so from right to the top. All right, so from right here, we got Walmart could pull back a little bit more. You guys already know I like to buy in the golden zone. So for the long term, Walmart earnings is coming up right here. Their last earnings hit, and then it had a pullback. On this earnings right here, it had a pullback. And then that earnings is coming up in a couple of days, so they could have another pullback. Since on the last 3 earnings, they did have a pullback. Let's click on this one. Their earnings is in February 18th. So it could pull all the way back to the golden zone. This would be a perfect opportunity for us to buy. But if we don't want to wait, let's look at the last consolidation point. So let's move this one right here to where it consolidated right there. And bam, it's still not in the golden zone, but we're much closer. It could pull back. I'll feel comfortable buying Walmart anywhere in the 139s or the 138. So if Walmart pulls back to 138, 139, I will get my skin in the game and pick up a couple of shares of Walmart. So that's Walmart. It is on the uptrend. Walmart is still on the uptrend, but we look at the bottom of this simple moving average line right here. If we draw an arrow on it, it is pointing down, and we don't want to catch a falling knife. When the arrow's pointing down, it means it's pulling back, and it looks like it's on a downtrend. If we put an arrow right there, it's pointing up. If we put an arrow right there, it's pointing down. So we might want it to recover. So we'll look at the MACD down here at the bottom, wait for it to cross over, and then that'll give us a great buying opportunity. So that is Walmart. So the next one we're gonna look at is Bank of America, ticker symbol BAC. All right, there we go. Bank of America has a dividend growth rate of 29% over the last 5 years. They pay out 2.43% dividend yield, and that annual payment is 72 cents per share. So let's take a quick market analysis over BAC. As you guys know, all right, there's another big consolidation point right here, but let's go all the way from the bottom. Pull out the Fibonacci. And there you go. We still have a little ways to go on Bank of America too for it to reach its golden zone. It's pulling back. The MACD don't look too bad. It is on the way back up, but it is oversold again right here. Once again, that's overbought. This is oversold. It's underneath this simple moving average line, and we could be getting in at a great deal. Once again, I'll wait until it pulls back to the golden zone for super long term. But if we used to move this to this current consolidation point right here, then it's touching the golden zone, but we don't want to be super risky and just hoping that it bounce off the golden zone. We want to wait until it get inside the golden zone, and then we'll pick up a couple shares. That's how we know that we got in at a great value. The Fibonacci sequence has not lied to me in a very long time. It's been very truthful to me. So I'm going to stay true to my beliefs on the Fibonacci sequence, and I'm going to wait until it get inside the golden zone. So this is Bank of America. This is just a very simple, very simple market analysis. I am not even drawing trend lines right now. Otherwise, this video will be an hour long. But let's go ahead and take a look at the next one, which is ticker symbol VZ. Verizon. Verizon have grown their dividends over the last 5 years 2.22%, and their dividend yield is 4.58%, paying out $2.51 per share. So let's take a look at Verizon, the last one, and then I'm going to show you guys how we can make millions of dollars. All right, so pull out the Fibonacci sequence. Here we go. All right, so it does look like Verizon has surpassed the golden zone and is all the way down to the 618. This is an awesome buying opportunity. It could hit a double bottom right here at the bottom of the 618 at $53.95. To be super careful, I'll wait until the MACD cross back over and start showing green bars down here at the bottom. I don't want to invest on anything that's is on the downtrend. I'll wait for it to trade sideways and then eventually start to come back up. So when it get back inside the golden zone, that's when I'll buy on the way back up. It's okay if I miss out on $1 or $2 catching it at the very bottom. not knowing if it's gonna go any lower. I'd rather catch it on the way back up in the golden zone and let Verizon eventually recover. The earnings did hit, so that's why it fell at a significant price point. It was all the way up to the simple moving average line. Earnings came out and then it took a big dip right there. So that's Verizon. We're gonna play the earnings report on Verizon and let that price point pull back even further and then get in at an awesome deal. So let me show you guys exactly how can we make money by investing into these three companies. So if we come over to trackyourdividends.com, this is that dividend calculator. Let's say we invested to Verizon, which has a dividend yield of 4.58%, Walmart, which have a dividend yield of 1.54%, and Bank of America, which have a dividend yield of 2.43%. That's a total of 8.55%. Divide that by 3, that gives us a dividend yield of 2.85% of all of these companies. So let's just type that in right here, 2.85%. Let's say that we start off with a $10,000 account and I invest $200 every single week. So that is $800 a month. The growth rate, let's just put it at 5% on the dividends. And historically speaking, stocks go up anywhere from 6 to 7% every single year, but let's be modest and just put 5%. And the number of years that we're going to continue to reinvest our $200 is 30 years. We're gonna hit calculate returns. Bam, right there. This is our total value. That's how much we make in a year, total of dividends. This is compounding effect. This is the snowball effect. So by year 30, let's scroll all the way down to year 30, we'll have a $1.6 million account and we'll be making $114,000 every single year in dividends. So that is the power of, even with a dividend yield of just 2.85%, that is the power of compound interest. That is the power of the snowball effect. So dividend investing is a long term. Even when the market is falling, we're going to get paid our dividends no matter what. So that is the power of dividend investing. It is the long game. This is what we're going to use to retire. And if you can't live off $114,000 every single year from dividends in America, then you need to move to Cabo and you'll live like a king. So there we go, YouTube. I highly suggest that you download Webull to use that tool. If you haven't downloaded Webull yet, that link is down in the description. It's way better than Robinhood. Robinhood been pissing me off as of lately. If you guys haven't known, Robinhood been pissing off a lot of people. But if you want to keep up to date on my in-depth market analysis and when I actually buy and sell these different dividend stocks, make sure that you click the link down in the comment section to join my Discord, to join my Patreon, where I'll post different market analysis charts over there on the Patreon. So make sure you click that down in the description. But down in the comment section, let me know which one of these three companies is your favorite. Down in the comment section, which one of these would you invest to for dividend stocks for retirement, or something that you can pass down to your kids, to your grandkids, to your great grandkids, and then they'll live like kings if you don't want to live like a king. But other than that, guys, I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.